Have you ever wondered if it's possible to make a 50% annual return starting with under $1 million? Well, today, we're exploring that very question.
Towards the end of 2018, you mentioned that you guarantee you could make a 50% annual return if you had to start again with under $1 million. The question is, if tomorrow you woke up in the body of a
your body.
20-year-old
Yeah,
American.
your body. But that's fine.
And your name was now Warren a la carte. And you had some money to invest on a full-time basis. What method or methods would you use to achieve that return? Would it involve flipping through 20,000 pages of Moody's manual or similar publications?
Yep.
Or finding, to find cigarettes? Or would it be hunting for great companies at a fair price as Mr. Munger would? Or would it be a combination of both with opportunity cost serving as the final arbiter of which method to use, given that your investing opportunity has now broadened significantly? Thank you. ขอบคุณครับ
Good question. I'm glad you came. And the answer would be, in my particular case, it would be going through the 20,000 pages. And since we were talking about railroads, I went through the Moody's Transportation Manual a couple of times. That was 1,500 or 2,000 pages, or probably 1,500 pages. And I found all kinds of interesting things when I was 50 or when I was 20 or 21. And I don't imagine there's anybody here that knows about the Green Bay and Western Railroad Company, but there were hundreds and hundreds of railroad companies, and I like to read about every one of them. The Green Bay and Western, in those days, everybody had a nickname for railroads. I mean, that was just what Northern Pacific was, the Nipper, and Phoebe Snow was one of them in the east that used to go up to Cornell, and the Green Bay and Western was known as grab baggage and walk, and GB&W, and they had a bond that was actually the common stock, and they had a common stock that was actually a bond, and that could lead to unusual things, but they wouldn't lead to unusual things that would work for you with many millions of dollars. But if you collected a whole bunch of those, which I set out to do, and actually that's what impressed Charlie when I first met him, because I knew all the details of all these little companies on the West Coast that he thought I would never have heard of, but I knew about the Los Angeles Athletic Club or whatever it might be, and he thought he was the only one that knew about that, and that became an instant point of connection. So to answer your question, I don't know what the equivalent of Moody's manuals or anything would be now, but I would try and know everything about everything small, and I would find something. And with $1 million, you could earn 50% a year. But you have to be in love with the subject. You can't just be in love with the money. You really got to just find it like essentially like, people find other things in other fields because they just love looking for it. A biologist looks for something because they want to find something. And that's built into. I don't know how the human brain works that much, and I don't think anybody understands too well how the human brain works. But there's different people that just find it exciting to expand their knowledge in a given area. I know great bridge players. I know great chess players, actually. Kasparov came to Omaha and met Mrs. B. I've had the luck of meeting a lot of people that are unbelievably smart in their own arena and do some unbelievably dumb things in other areas. So all I know is the human brain is complicated, but it does its best when you find out what your brain is really suited for, and then you just pound the hell out of it from that point. And that's what I would be doing if I had a small amount of money and I wanted to make 50% a year.
As Warren Buffett suggests, thorough research can uncover extraordinary opportunities, even in the most unexpected places. Take, for example, the story of the Green Bay and Western Railroad Company. The Green Bay and Western Railroad Company was a real railroad company that operated in Wisconsin, USA, during the late 19th and early 20th centuries. While not as well known as some of the larger railroad companies of its time, it played a significant role in the region's transportation and economic development. The company's story is intriguing because it represents an example of an unconventional investment opportunity that could yield significant returns with thorough research and understanding of the market. The Green Bay and Western Railroad Company, like many smaller railroad companies of its era, faced financial challenges and was often overlooked by investors focused on larger, more prominent companies. However, diligent research by investors, such as Warren Buffett, revealed hidden value within the Green Bay and Western Railroad Company. Despite its relatively modest size and lesser-known status, the company's assets, routes, and potential for growth were identified as undervalued or overlooked by the broader market. Investors who took the time to understand the intricacies of the Green Bay and Western Railroad Company and similar smaller companies could uncover opportunities for substantial returns. This story serves as a reminder that success in investing often requires looking beyond the obvious and conducting thorough research to identify hidden gems in the market. Overall, the Green Bay and Western Railroad Company's story illustrates the potential rewards of delving deep into research and considering unconventional investment opportunities, even when they may not be immediately apparent to others in the market. But is deep research the only path to success? What about the strategy of hunting for undervalued companies, a method favored by many successful investors? Warren Buffett's investment philosophy, hunting for undervalued companies, is a key strategy that emphasizes finding great companies at a fair price. This approach involves identifying companies that are trading at prices below their intrinsic value, often due to temporary market fluctuations, investor sentiment, or overlooked fundamentals. Warren Buffett, a proponent of this strategy, has built his investment empire by seeking out undervalued companies with strong fundamentals and long-term growth potential. This strategy of hunting for undervalued companies aligns with Warren Buffett's investment philosophy and underscores the importance of thorough research, identifying great companies, buying at a fair price, and maintaining a long-term perspective. This approach emphasizes the fundamental principles of value investing and has proven to be highly successful for Buffett and many other investors who follow a similar strategy. Warren also highlights the significance of opportunity cost in investment decisions and underscores the need for investors to carefully evaluate the trade-offs involved in choosing one investment method over another. By incorporating opportunity cost considerations into their decision-making process, investors can make more informed choices that align with their financial objectives and maximize their potential for long-term success. Now, you might be wondering, how can I apply these insights to my own investment journey? Well, it all boils down to passion and dedication. As Warren Buffett suggests, achieving high returns requires more than just a desire for wealth. It demands a genuine love for the game, a thirst for knowledge, and an unwavering commitment to excellence. So, whether you're a seasoned investor or just starting out on your investment journey, remember to follow your passion, dive deep into your research, and stay committed to your goals. Remember to like, share, and subscribe to our channel for more valuable insights into the world of finance and investing. Until next time, happy investing